Hey everybody, today is July 19th, and boy, the summer is just trucking along here. So I'm Joshua Phillips with Churchill Mortgage. I wanted to share a little bit of market and mortgage rate update for you as I do every Friday. So I usually like to start with a headline in terms of what I'm seeing economically. To be honest with you, it was kind of a slow week in terms of economic headlines. I will point out some of you may be dealing with this IT outage. It is affecting some of the things in the mortgage industry, not Churchill Mortgage specifically, but some of the companies that we utilize. So you may be experiencing that well, and hopefully it gets resolved quickly for all of us. So let's jump in here as we do every week and take a look at these charts. If you're new to this, these are mortgage-backed security charts. Mortgage-backed securities are where mortgage rates derive their value. And this is what's called a Japanese candlestick chart. All you really need to know is that red is bad, green is good, and the higher the security price, the better mortgage rates are doing. So to be honest, this week was kind of a dud. Not a lot happened. It was a pretty flat week. We kind of started the week right here. We kind of ended it right here. It was just a bunch of nothing. Rates did not really change much at all. It's sometimes watching mortgage rates is kind of like watching paint dry, as rates really didn't move, maybe even an eighth of a point this week. But if you step back, as we've talked about, let's look at the 6-month charts. We see what's going on this year. We really saw rates get worse. Again, it's an inverse relationship with these charts. We did see rates get worse from the start of the year through April, when we kind of got to our sort of worst levels of this year. And then we've kind of been on a nice little upward trend. I kind of like it, slow moving, little up, a little down, but the trend has been improving mortgage rates. And of course, they are saying that there's a very high chance that the Fed's going to start cutting the Fed fund rate in September. Now, before we all get crazy excited and think that somehow mortgage rates are going to suddenly drop, a percentage point, the Fed's probably going to lower the Fed fund rate 0.25%. Also, the Fed fund rate is not mortgage rates. So mortgage rate improvements are probably going to continue to be slow, but hopefully steady. And it won't be a direct line. It's going to be a roller coaster. But I'm certainly hopeful that by the end of the year, maybe we'll be solidly in the upper sixes and maybe you can buy your rate down to the lower sixes. That's might be an expectation by the end of the year. Again, rates are pretty good. We're a lot better than we were a year ago, and we're better than we were in April. And I've just enjoying the slow, steady improvement that we've seen over the last couple months. So as always, feel free to reach out to me if you want to talk about your specific situation. And we can talk about getting pre-approved. We can talk about specific mortgage rates for you and how to plan for your home purchase. Or if you're thinking about refinancing, how to start thinking about that as we plan for that in the future. Anyway, have a great weekend, and thanks for checking into my market update. Bye-bye.